Booyah! Welcome back to Stock Yoga, where we bend the market to our will. Are you ready to make some money? I know I am. People are always asking me, what's the play? Where's the action? They're scared, they're nervous, they see red on the screen and they run for the hills. Not us. We're not traders, we're investors. We do the homework. Looking for stocks to add to your portfolio. Here are 4 to consider buying today. These aren't just tickers on a screen, they're stories of success, engines of innovation, and right now they're screaming buy, buy, buy. Now listen up, because this is important. As of July 15, 2025, the market is giving us a gift. While others are wringing their hands about inflation, interest rates, the Fed, we see opportunity. We see companies that are executing flawlessly, crushing the competition, and delivering real value. These are the names you want to own, not rent. I've gone through the numbers, I've listened to the conference calls, I've done the deep dive so you don't have to. We're talking about 4 companies that are absolutely on fire. So grab a notebook, put down that remote, and give me your full attention. We're going to break down Centene, Deckers Outdoor, Copart, and the unstoppable Lululemon. Each one of these has a compelling story, a reason why it belongs in your long-term diversified portfolio. This isn't about speculation, it's about identifying best-of-breed companies that are built to last. Are you with me? Let's get ready to make some money. Ski-daddle! First up, let's talk about Centene, ticker CNC. Now, healthcare can be a minefield, I get it. It's complicated, it's political, it's enough to make you want to throw in the towel. But that's where the opportunity lies. Centene is a managed care giant, a titan in government-sponsored healthcare programs like Medicaid and Medicare. While other companies are chasing fads, Centene is providing an essential service to millions of Americans. This is not a discretionary purchase, folks. This is a necessity, and that means a steady, reliable revenue stream that you can take to the bank. The bears will tell you about reimbursement risk, about political headwinds. Noise. I say it's all noise. What I see is a company that is a master of execution. They know how to manage costs, they know how to navigate the regulatory landscape, and most importantly, they know how to grow. They are constantly winning new contracts and expanding their footprint. This isn't some high-flying tech stock with no earnings. This is a cash flow machine trading at a valuation that is just plain silly. It's too cheap. The market is asleep at the switch on this one. Look at the management team. These are seasoned pros, not some kids in hoodies. They've been through market cycles, they've seen it all, and they continue to deliver quarter after quarter. They're focused on value creation, and that means value for you, the shareholder. They're streamlining operations, they're improving margins, and they're setting themselves up for a fantastic run. When I see a best-of-breed company in a defensive sector that's been unfairly punished by Wall Street, I don't run away. I back up the truck. So what's the bottom line? Centene is a high-quality company with a durable business model that is trading at a discount to its peers and its own historical value. The fear in the sector has created a golden buying opportunity for patient investors who've done their homework. You're getting growth, you're getting value, and you're getting a business that's fundamental to the fabric of our country's healthcare system. That's a powerful combination. Don't miss out on this one. Buy, buy, buy. Alright, let's switch gears. Let's talk about a name that has absolutely been on fire. Deckers Outdoor, ticker DECK. People hear Deckers and they think Uggs. They think it's a one-trick pony, a fad from the 2000s. Wrong. So wrong. To think that is to completely miss the revolution happening at this company. Yes, UGG is still a powerhouse, a cash cow that has shown incredible resilience and brand power. But the real story, the one that should have you hitting the buy button, is Hoka, H-O-K-A. Remember that name? Hoka is a juggernaut. It's a freight train of growth that is absolutely crushing the competition in the performance running and footwear space. Go to any marathon, any running trail, any hospital where people are on their feet all day, you'll see Hokas everywhere. This isn't just a shoe, it's a movement. They have created a product with a cult-like following based on comfort and performance, and they are expanding their reach at a blistering pace. This brand alone is justifying the entire company's valuation, and it's still got a long runway for growth both here and internationally. What I love about the Deckers story is the masterful brand management. They've kept UGG relevant and profitable while incubating and unleashing the Hoka monster. This management team knows what they're doing. They are brilliant marketers, savvy operators, and they have their finger on the pulse of the consumer. They're not just selling shoes, they're selling a lifestyle, and they're doing it with incredible margins. This is a high-growth, high-profit business that the street continues to underestimate. Every time the bears come out and say the run is over, that growth is slowing, Deckers comes out and puts up a monster quarter that blows away expectations. They are firing on all cylinders. The combination of the steady, high-profit UG brand with the hyper-growth Hoka brand is a 1-2 punch that is knocking out the competition. You're getting a growth story at a reasonable price, led by a management team that is simply best in class. Don't bet against them. This horse has a lot more room to run. Next up, a name you might not know but you should. Copart, ticker CPRT. This is one of my favorite kinds of businesses. It's a sneaky toll road, a hidden gem that profits from an unfortunate but constant reality: car accidents. Copart runs a global online auction platform for salvage and used vehicles. When a car is totaled by an insurance company, where does it go? It goes to a Copart auction yard. They are the essential middleman in this massive industry, and their dominance is almost absolute. Think about their moat. Could you replicate what Copart has? No way! They have a massive network of physical salvage yards strategically located all over the world. That's real estate, that's logistics, that's a physical barrier to entry that is almost impossible for a competitor to overcome. Then you add their online auction technology, which connects a global network of buyers, rebuilders, dismantlers, used car dealers, with a massive inventory of vehicles. It's a network effect that gets stronger with every new buyer and every new vehicle listed. The beauty of this business is its consistency. It's recession resistant. People crash their cars in good times and in bad. In fact, you can argue it's even better in a tougher economy when people are looking for cheaper used cars and parts. Furthermore, as cars get more complex with sensors, cameras, and computers, they become more expensive to repair. That means more cars are declared total losses by insurance companies, and that means more inventory for Copart's auctions. It's a secular tailwind that's blowing right at their back. This is a business that just prints money. It's got huge margins, fantastic returns on capital, and a long history of rewarding shareholders. Management runs a tight ship, and they are constantly innovating to make their platform better and more efficient. They are the undisputed king of a fantastic niche industry. While everyone else is chasing glamorous tech stocks, Copart is quietly compounding wealth year after year. This is how you build a fortune in the stock market, by finding incredible businesses like this that are hiding in plain sight. Last but certainly not least, the powerhouse, the phenom, the legend Lululemon, ticker LULU. I have been a believer in this story for years, and the company just keeps getting stronger. The skeptics have been calling for the top on this one forever. They said it was a fad, they said competition would crush them, they said the valuation was insane, and for years they have been wrong. Lululemon is not a clothing company, it's a cultural phenomenon. It has created a brand that people are not just loyal to, they are fanatical about. What's the secret sauce? It's threefold. First, product innovation. Their fabrics, their designs, their quality, it's second to none. They create products that people want to live in, not just work out in. This has allowed them to command premium pricing and maintain sky-high margins that other apparel companies can only dream of. They are the Apple of athleisure. People are willing to pay up for the Lululemon logo because it represents quality and status. That is a powerful position to be in. Second, their direct-to-consumer strategy is pure genius. They control the customer experience from start to finish, from their beautiful stores to their seamless online platform. This creates a tight bond with their community and gives them invaluable data on what their customers want. They're not just selling leggings, they're building relationships. This direct connection is a massive competitive advantage that allows them to stay ahead of trends and keep the brand fresh and exciting. And third, the growth story is far from over. They are successfully expanding into menswear, a huge untapped market. They are pushing into new product categories like footwear and accessories. And their international expansion, particularly in Asia, is just getting started. This is not a company that's resting on its laurels. It's an apex predator that is constantly on the hunt for new avenues of growth. The stock may look expensive on a trailing basis, but when you factor in the future growth, it's a price worth paying for this best-of-breed innovator. There you have it. 4 incredible companies: CNC, DEC, CPRT, and Lulu. 4 different sectors, 4 different stories, but one common theme: they are winners. These are the kinds of high-quality businesses that you can build a portfolio around. We're not looking for a quick trade, we're looking for long-term compounders. These companies have the moats, the management, and the momentum to help you create real wealth over time. Don't be scared of the noise. Don't listen to the talking heads who are paid to be bearish. Focus on the fundamentals. Remember, I'm not your financial advisor. My job is to give you ideas, to get you started, to show you where the action is. But the final decision is always yours. You have to do the work. Always do your own research before investing. Good luck. Go through the conference calls, read the annual reports, and make sure these stories make sense to you. Conviction is born from homework, and without conviction, you'll just sell at the first sign of trouble. We're in this for the long haul, so stay disciplined, stay focused, and keep looking for those best-of-breed companies that the market has overlooked. They're out there, and here at Stock Yoga, we're going to keep finding them for you. There is always a bull market somewhere, and our job is to hunt it down. Thanks for tuning in, and I'll see you next time. Don't you dare miss it. Boo-yah!